What's up, guys? My name's Curtis, and welcome to 5 Minute Finance, where I take personal finance topics and explain them to you in 5 minutes or less. For most people, a car is one of the most expensive items they'll ever own. In most cases, second only to a house. Most new cars purchased also come with a loan, but are monthly auto payments killing your ability to grow wealth? Forbes absolutely thinks that might be the case, so how much is your car payment truly costing you? To start, let's look at the average monthly automobile payment. In 2018, the average monthly car payment was $545, and the average length of term for an auto loan was 69 months. The straightforward answer of how much your car loan is costing you would be to take the monthly payment, multiply it by the length of the loan, and it would be around $37,000. But let's look at it a different way. What if we invested that $545 every month? If we assume a 7% average annual return, which is approximately the historical return of the S&P 500 adjusted for inflation with dividends reinvested, we will see that after those 69 months, you would actually have over $45,000. In addition to that, what do people most often do as soon as their car is paid off? They go right back to the dealer and they buy another one. And they do this over and over and over again for the entirety of their life. So, how much money would you have if you invested $545 every single month for your entire working life? Well, if you invested that much money every single month from age 20 until age 60, again assuming a 7% rate of return, you would have a whopping $1.34 million. And you yourself would have only contributed around $260,000 to that account, less than 20% of what the final account value could be. I don't know about you, but I'd much rather have an extra $1 to $1.5 million when I retire than a new car every 5 to 6 years. Now, I know this might be unrealistic to invest the average car payment every single month because at the end of the day, we all need some form of transportation. That's why I wanted to give you guys 2 additional scenarios to show you how a small change now can make a huge difference long term. The first scenario would be to either buy a used car or a cheaper new car while still using a loan. Let's say you bought a new car with a monthly payment of $300. That's still more than half of the average monthly payment, but you would be able to invest that additional $245 each month that you would be spending toward the more expensive car. Invest that difference between ages 20 and 60, again 7% return, and you would have over $600,000. So by simply committing to always buying either a cheaper car or a used car or a car with a lower monthly payment, you can end up with a lot more money to your name when you retire. The other scenario, and this is geared more toward the younger people watching, is the idea of deferred gratification. Let's assume that right out of either high school or college, you decide to buy one used car with cash, drive it for around 5 years, and then you can buy new for the rest of your life. What this means is you could invest that $545 per month for 5 years, stop investing altogether, and then drive a new car the rest of your life, always have a car payment. After 5 years of $545 per month, around 7% annual return, you would have about $38,000. Here's where the magic comes in. If you kept that $38,000 invested and you never touched it again for the next 35 years until you reach retirement, you would have over $400,000. So by simply sacrificing one new car early on in your life that probably cost $30,000 to $40,000, you can retire with an additional $400,000. The idea of deferring some gratification now for a better financial future is something that everybody should become masters of. A little bit now goes a long way in the future. Guys, I know it may not be possible for all of you out there to invest $545 per month, and I'm sure a lot of you guys that do have car loans, your payment isn't even close to that $545 average. But I hope this video helped you realize that maybe you don't need that new car every few years. And even if you do get a new car, maybe it's better to buy something used or cheaper with fewer options. I'm not going to tell you what to do, but I personally would recommend, if at all possible, buy used cars with cash. And if you do need to take out an auto loan for whatever reason, don't ever borrow as much money as the bank is willing to lend you. If you guys enjoyed this video, please give it a thumbs up. It would really help me out. And if you're new around here, consider subscribing for more.